We've spoken in several webinars in the past about trade finance, the importance, obviously, of trade finance. We have witnessed a huge supply chain crisis with the lockdown in China. I think more and more people are becoming aware that trade finance is a serious application for blockchain. It has to pay cryptocurrency assets, crypto assets play a role here. Why don't we start with the general overview of where trade finance is, what problems we are facing from your point of view? Can you give us a quick state of the nation in trade finance?
Yes, certainly, Martin. And basically, it is actually a niche business. And often the trade finance professionals face the issue that their business is not well understood. We all understand payments. Bankers understand liquidity management, cash management, but trade finance is often an area that is quite hidden into the bank, highly specialized, with people who get into this business and stay for their whole career and become experts in doc checking, for instance. So trade finance is really a business that requires often more explanation. But at the end of the day, what is interesting for most of us, and also, as we will talk about, for liquidity providers and the capital markets world, is that trade finance supports the real economy. It represents working capital. It represents funding of real economy activity. SMEs, a lot of millions of people, hundreds of millions of people working in SMEs. It represents activities of large corporates, of banks, of course. And this is why trade finance has become quite a new investment class. And we'll talk about more in the future, in the coming minutes about it. So the challenge still is that trade finance is still an activity which is organized around highly specialized ways of working, instruments, techniques to bring funding to those who need it, because that funding is provided through dozens of different types of instruments, structures, and that's where it becomes complex. So it's not really standardized as you would have.
Can we say that trade finance is what makes local economies, regional economies works, makes international trade, global trade work, makes globalization as a whole work?
Yes, definitely. It's both cross-border activity, but also local activity. Because when you want your funding to fund your economic activity as an SME, for instance, you go to your bank, you're asking for a trade loan, or you're asking to fund some invoices. Those invoices could be domestic because you have sold to clients in your own jurisdiction, in your own country, or you have sold cross-border. So trade finance, definitely these are the two key dimensions. Cross-border, about indeed 19 trillion of USD activity, versus the domestic, which is usually around 70 trillion of activity. And banks are
for comparison, the capitalization of the cryptocurrency market is about 1 trillion, 1.5 trillion, right? It used to be 2 trillion when Bitcoin was up. And then compare that to the bond market, which is, I think, 132 trillion. Yeah. That sort of puts us in perspective for the people who are into crypto, right? How small crypto actually is compared to all the other human activity and trade activity.
And that's exactly the right way to look at it. That's the only figure I check when I look at the market cap of crypto, is this total market cap. Because if it's down, everything goes down. If it's up, everything has gone up. So that's really looking at the total market cap of a particular asset class, whether it's real estate or crypto or trade finance or bond, as you said, is the right way to look at it. It's very interesting to compare those.
Trade finance has been around for at least 100 years, definitely longer if you count all the ancient instruments of that. Can you give us a quick overview of what instruments, what procedures are involved, especially in the light of you said trade finance is not about payments primarily?
Yeah, trade finance, the difference, because I worked in payments as well when I was at Swift, and I still am involved in payments activities. But in payments, what you do is you're moving money from the one who has it to the one who needs it. So you debit an account and then you credit an account. Because you credit after the debit, you don't take any risk as a bank, because you are providing funds, but to someone on the basis of funds that someone else had. In trade finance is very different, because you're going to advance funds to someone who needs it, but who will pay you later. So you credit before you debit. As a bank, you advance funds through a letter of credit or receivables that you're financing, invoices that you're financing, or through a loan. And basically, you take a risk, which is why you're taking a margin, and you are taking some collateral and security, possibly some credit insurance, because the money will come back after a few weeks, months, or years. And there is a risk, of course, of not receiving the money back. And that's the business of trade finance, mainly for banks, but also for alternative non-bank funders, is really to take a risk on businesses. And that way, what makes it very interesting, because it's complex to take a risk.
In payments, all I need is a sender account and the receiver account. I don't need to necessarily give a reason unless I send huge amounts of money and get on the radar of money laundering and financial crime authorities. But all I need is a sender account and the receiver account. Whereas in your case, you're describing financing, you're describing loans. And from that, it results that trade finance involves a lot of documentation. A lot more than just simply sending money from A to B. If I want to get a loan, I have to prove a lot of stuff. If I execute international trade, I have to document what I'm sending, why I'm applying for the loan. In this light, the current system of trade finance, if we can just briefly describe this, simply is still relying on the exchange of physical pieces of paper or emails, and what are the tools for trade finance as it stands now?
So I like to take first a high level perspective on when you're funding businesses. You mentioned bonds earlier. When you're funding a business, you can just advance money, like in the bond market, and you're not buying anything from the company. You're just advancing funds, and you hope indeed that to get a yield on that, like a fixed income instrument. However, in trade finance, what the banks are doing, they are funding specific transactions. So they are not just advancing funds like this. They are funding a specific invoice with a specific counterparty. They are funding a particular risk on a counterparty, like with a guarantee or a letter of credit. So trade finance is made of a series of ways to provide funds, but the funds are always indeed related to a certain transaction between a buyer and a seller. That could be domestic, it could be cross-border. So depending on the instrument, you as a bank engaging and providing those funds, you will need some documents. If it's only an invoice, it can be electronic. If it's a letter of credit and you want to indeed process the whole life cycle of the letter of credit, you will need a lot of other documents, like a certificate of origin, a bill of lading, and a lot of other documents. And we could end up with 100 pages of paper documents for the bank to operate the letter of credit. I will not go into the details of how that works. Definitely not, but that's how complex it can become for the bank, depending on the instrument.
Anyone who's ever worked in trade finances that knows that behind every single transaction here, there is a floor full of people dealing with documents and chops and signatures and and a lot of bureaucracy and a lot of paperwork to get major, but even the smallest deals done. Can we touch briefly on the matter of regulation and developments in policy? I'm referring in this case particular to the Queen's address. His Royal Highness the Prince of Wales delivered the address this time, and he spoke about the United Kingdom's push on the one hand towards cryptocurrency, which is somewhat in doubt because not all the government agencies agree. But one thing that was highlighted, especially by the huge fan community of XDC, was the fact that now we have royal support for trade finance on the blockchain. What was the takeaway from this announcement? How is policy in trade finance looking in Europe, in the UK, and worldwide?
Yeah, that's
also in the light of MLETR, right?
Yes, definitely. So basically, that's a major policy work in trade finance, possibly the most important one. But there is another one that we can highlight. But so basically, what we're trying to achieve here, and we started in 2020 in the UK, reaching out to government, to different entities like the Law Commission and ICC UK. And we told them technology can do a lot of things, including blockchain, but not only blockchain. And this will not happen. Banks and the SMEs will not be able to use that piece of technology unless you change the law. And this is not a new problem. It's a requirement that has been identified already years ago. And some lawyers at the level of the United Nations have worked on a model law, that means a reference text, to help governments around the world change their laws in a way that is quite standardized. And this is what you just mentioned, the MLETR, the model law for electronic transferable records. It's a kind of a complex name, but that's why we shorten it with MLETR to refer to electronic bills of exchange, electronic promissory notes, and electronic warehouse receipts and bills of lading. And there are a few others that we could mention. Basically, those instruments, are title documents. So the one who holds it in his or her hands owns the payment obligation, the money that those documents represents. So if you own a bill of lading, and basically then you are the owner of the content of the cargo. So it's very important when we move to from paper to electronic, to have something highly secure so that we can prove exclusive ownership of the electronic record, and we can organize a transfer of ownership electronically. So blockchain helps for sure, but the countries have to basically change their laws. And the model law was released in 2017, and it has been implemented first in Bahrain, then in Singapore and Abu Dhabi, global market for the offshore business, and now the UK. The UK is a huge milestone, and it will happen this year because it's part of the government plan now, and it will have a ripple effect on the other major jurisdictions like France, Germany. I'm involved in developments in France, for instance, on the same topic. We had a nice session yesterday on that as well. So changing
Is it a matter of national jurisdiction, or is it the European Union's?
Yeah, we're also talking to European Commission on eIDAS to make sure the eIDAS is extended to include electronic originals. But actually, at the end of the day, the expert lawyers at the UN tell us this is a matter of national regulation, national laws. We need to change the law in each country, and it's not easy to change the law. It's going to take, which is why we're very happy with the way the Law Commission and Sarah Green in particular have been progressing on this. And the beauty for us in trade finance and blockchain, because the technology solution will be based on blockchain, but the beauty is that this is basically us in trade finance applying digital asset technology on negotiable instruments. So you take a very old instrument like the bill of exchange, which has been codified into English law in 1882. The Bill of Exchange Act exists. It will now be extended with an Electronic Trade Document Act, which is what the Queen's speech referred to. And actually, the way to address this from a tech perspective is to apply digital asset technology and creating NFTs for those documents and using a public blockchain for that purpose. And that's exactly what we're doing with the DNI initiative on the basis of the NGO technology, to be more precise. So it's very interesting to see a very old business, trade finance, requiring paper because it's hard to digitize electronic originals. And suddenly we can apply very recent technology to address this purpose. And we have a very nice alignment of policy, MLETR, national governments like governments like the UK seeing the light, and they say, yes, this is important for our economy. There's a whole business case the banks developed, and we apply the technology we know of, which is quite recent. Blockchain is quite recent for addressing the market needs. So very exciting developments in this area.
As a former European trade diplomat, I was always flabbergasted by the Brexit discussion. And now, since the Queen's speech, for the first time ever, I see an advantage to Brexit, because they get things done now. You know, you don't have to wait for committees and every member state to change their law to get things working. Let's focus on the blockchain. Uphold Europe is based in London, so we are right at the center of these developments. We're very happy that we are regulated in the UK and have a very strong position in utility tokens and digital assets, away from the hype and the meme coins. This has become a pillar of Uphold's strategy by and large. We have, for that very reason, listed XDC on Uphold, and we're working very intensively with other projects surrounding the trade finance industry. But if you get back to blockchain itself, is it just about moving all these documents, these processes on the blockchain, and making them legally acceptable, legally valid by different jurisdictions? Or what other advantage does blockchain in trade finance offer?
So basically, there are different ways we are applying blockchain into trade finance innovations, digital innovations, of course. For those negotiable instruments in particular, the tracking capability of blockchain, to be able to track the life cycle of an asset, is the key feature here. We can do more with blockchain, but tracking the life cycle of a document that, in this case, Enigio secures, is how blockchain helps. And the use of public blockchain is very important here, because what we're doing, we are digitizing the document in a file that is secured, that doesn't get onto the blockchain. The only thing that gets onto the blockchain is a hash. So there is no business data getting onto the blockchain, but the blockchain is used to track the life cycle of the asset, and the asset is the document. It could be a guarantee, a bill of exchange, or other types of documents like a contract. And then anytime the document is updated, because the content has changed, the status has changed, the ownership has changed, the blockchain is updated, so that everyone knows, if you get the document for reading it, you can query the public blockchain without any registration. You query the public blockchain, and you know that that version of the document you just got is valid. And maybe a few minutes later, it will be invalid because someone has updated it, and the public blockchain gives you the continuous status. So tracking of the life cycle is key. There are different ways to do it. You don't need to absolutely blockchain for this, but it's something that blockchain offers as a basic feature. And then over time, when we get liquidity or payments capabilities on the blockchain, we can also settle the instrument. You know, when you transfer the bill of exchange, you want payment against the bill of exchange, for instance, or the guarantee, then the payment can be done on the blockchain as well. But that's another feature that blockchains could support.
If I work with traditional tools in trade finance, and if I suffer a data breach, a hacker can steal my documents that I have on file on the computer. The hacker can then see what I've been buying, what I've been selling, the amounts involved. Whereas on a public blockchain, all they can see, I can offer proof of the transaction, but nobody sees my trade secrets. Yeah. Is one of the driving forces behind the adoption of blockchain for trade finance the security and privacy aspect? And do we have sufficient tools as of now to secure privacy and cybersecurity for trade finance?
So basically the way, so we have different, or at least I'm involved in different initiatives that I'm chairing for on the trade finance side, like the DNI initiative for those negotiable instruments, the rollout of MLETR. And this is where, as I just explained, there is no business data getting into the blockchain. The business data stays in an electronic file in the back office of the bank. It could be viewed by clients over a portal that is secured. So the blockchain is really used as a tracking tool, for using a public blockchain infrastructure. And that could be a lot of different blockchains in infrastructure, but Enigio has one, a proprietary one today. And then on another feature where the blockchain is really making a difference is where we are actually enabling some processes to become much more cost effective. So, for instance, what we never thought we would do, and this is something that is in development, we already have hinted the market, but we have not yet proven what we aim to do, because it's still a matter of weeks, is basically with blockchain, we're going to bridge trade finance with the retail investors. And why can we do that now is because the blockchain enables us to do that at a price point which is much lower than the traditional method of issuing notes to capital markets. Because the costs are so high when you issue notes at capital markets that you better have high volumes. And who has high volumes of funds to invest in an asset class like trade finance? It's only the institutional investors like pension funds and family offices and asset managers in general. But with the blockchain, the costs are much lower, at least with some blockchains, the costs are much lower. And we can tap into a much larger user base, like the retail investors. And that's what we are working on the trade finance distribution initiative, as we already covered in various articles. And it's really the technology that enables to bridge a very institutional business of trade finance, handled by banks, operated by banks, with retail investors that will be able to buy a token, and that token will be allocated to trade finance activities. So that's where we're using blockchain as a source of liquidity for anyone to invest some dollars or euros into a token that will be a utility token for the trade finance activity. So that's really innovative. It's not just tracking an asset, it's really bridging two worlds.
It opens the world of trade finance to retail, to the general public. It is it's not a perfect simile, but it is very similar to crowdfunding efforts, right? You could have hundreds and thousands of people, millions of people participate in trade finance, earning money by giving loans. Are there other aspects? I've spoken to some people in my group in Brussels, and the possibilities outlined here reach from, for example, smart contracts that allow us to deliver trade data to authorized bodies. So you could track the movement of goods and the value traded anonymously and securely in real time. So we wouldn't rely on our trade statistics. You know, all the statistics we have now are basically lagging, right? They're 2, 3, 4 months in the past. So we actually live in a centralized global world, constantly relying on data that is already 3 to 6 months old. That is something that could be solved. Then I had a very interesting peripheral conversation with somebody from Fair Trade, who sees a lot of opportunities in trade finance, in trade with blockchain, to assure that the trade that happens is actually fair trade, and the parties involved fulfill some ethical standards. Forgetting for a moment where we are right now, where do you see us going? What opportunities do you see in trade finance for blockchain? Where will we be in 10 years from now?
I mean, the key word I think is transparency. If you're funding an activity and you're missing information, today it's quite acceptable because you know you can't get access to the information because it is outdated. So the information maybe you have is a balance sheet of 18 months ago, and even 6 months ago with the economic uncertainty is no value. Tomorrow, where we're heading is real-time transparency. What you can't monitor with an API on a real-time basis is either suspicious or will become suspicious, or will become something you want to stay away from because you don't have enough data to take the right decision. So basically, you mentioned the sustainable trade. That's a key priority in trade and in trade finance, because the liquidity providers, banks, but also those institutional investors, they want to be sure that their money is used for to address climate change priorities and therefore economic, social, and the whole ESG concern. And data will address that need. We want to take data from the factory, know exactly the age of the people working there in this particular country, and getting their feedback on how much time they have worked, the conditions they have worked, the ISO certifications the factory has, and so on, and bring that down to the liquidity providers on the banking side to demonstrate this business is operating as the ESG requirements are requiring, are basically specifying. So transparency between the real economy activity, pulling data from that world and bringing that to those who are the liquidity providers, starting with the banks, but also the liquidity providers of the banks, bringing that in real time to them at transaction level, not just at business level, but really at transaction level, is what where the world is going and where blockchain can help for sure.
I'm sure you've had this experience. I was invited about a year and a half ago to speak before the C-suite of a major bank in Europe, and the head of the bank welcomed me into the room and introduced me and then said, "So please go ahead. What is that blockchain thing everyone's talking about?" Yeah. How far away are we from the mainstream, from your bank in your neighborhood, from everyone waking up to the fact what blockchain can do, not just for investors in cryptocurrency, but for the world economy?
Yeah, and that's really my goal also with the two initiatives I'm taking care of these days, the DNI on the MLETR front and the TFD with TradeTech on the institutional investors and the retail investors, is to demonstrate how blockchain is really bringing a solution to a known problem, like digitizing negotiable instruments. It's a known problem. And on the TFD side with TradeTech is demonstrating how blockchain opens up new avenues that we couldn't imagine in the past. And basically on both tracks, we need to raise or create new expectations from those who are interested in ESG and who need that transparency, like a credit insurer helping a bank cover risks on invoices. Is that invoice existing? it has maybe existed some days ago, but what is the current status of that invoice? Is it still existing? And with blockchain APIs and real-time transparency, you can have machines checking the status of assets like an invoice, a letter of credit, or other instruments on a continuous basis, and basically address the top concern on the financial side, which is fraud. I'm hearing more and more from asset managers and banks, credit risk is not the main concern, but fraud is the main concern. And this transparency that blockchain enables the physical supply chain, the logistics companies, the businesses to offer to their funders is going to help the funders fight fraud.
You'd be surprised how many people and journalists still believe that if you're in blockchain and Bitcoin, you're doing something illegal with weapons sales and drug and money laundering. For a while, blockchain and Bitcoin had a very bad reputation because of the dark web. Obviously, the worst thing you can do if you want to commit fraud is to put it on the blockchain. It is absolutely the safest and most public forum out there, and real crime is committed by people in suitcase with suitcase full of money, not with people on the blockchain. Yeah. I need to address the elephant in the room, that being your role at XDC. I'm happy to work for a company that for several weeks in a row, one of the most traded and bought assets on Uphold is XDC. So we are so far away from many of the other crypto companies who deal with hyped coins and coins that are simply popular with investors. Whereas at Uphold, we try to stress utility, and it's been a source of pride for me and my boss that XDC is one of our most popular assets. Can you tell, bearing in mind that there's thousands of people listening to this call who bought XDC or like XDC, who know your name, as evident from the first message we had in the chat room, Andre Casterman for president, right? You are a celebrity in the XDC community. You are known to basically everyone who's ever bought XDC. What's your role there? Where you see the role of XDC? Why is it the proper network for trade finance? What alternatives are there? Can you give us a few words on XDC itself?
Yeah, so my role with XDC Network is really to bring XDC into transaction banking. And it's not just trade finance, it's also payments. So basically, I've been rolling out innovations for 25 years to large banks. Of course, in the 90s, that was on behalf of SWIFT. And the trick is always to find, to deliver value to those players by combining existing technologies they use with new technologies. We can't assume large banks to drop their past investment in their technologies. So the key to bring value on the basis of new technologies, such as XDC Network, but it could be others as well, is to find the right recipe to combine old technologies with new technologies. And these days, I'm actually focusing on combining new technologies from some vendors with new technologies from XDC Network. And more and more, it's really a cooking experience to assemble pieces together, and also make sure that for banks, the use of the XDC network or the use of a new technology relying on XDC network is as smooth as possible, so that the impact on their back office, on their contracts, is as limited or absent in some cases as possible. So that's really the where I operate, is to find the use cases that where we can deliver value propositions for short-term relevance and minimum impact on the banks. And what I like about the XDC network, when I first met Ritesh and Atul some years ago, is their focus indeed on this wholesale transaction banking landscape and their openness to be interoperable with others. Because XDC network is just not another fortress that is built. It's a network that connects with existing technologies, as I said, that banks use today, and with new technologies that the partners are developing. Like TradeTech is a very good example, or on the trade distribution side, or Impel on the payment side, and there will be many others there. So really, this ecosystem is the one I'm more and more discovering, because there are many developments on the XDC network, and we need to see how we can move more and more processes on chain. As I said, the basic feature is the tracking of an asset, and that's what is done on the digital documents and the electronic originals with Enijo. But bringing liquidity on the blockchain is what TradeTech is focusing on, and Impel is all about the ISO 22 payments. But we can't move all of those processes in one go onto the blockchain. We really need to be very selective and show to banks they can benefit as well. It's not a threat. It's an opportunity to address today's issues, like digitizing negotiable instruments. They need it. Their corporates ask for it. That's why the banks are really involved in this. And also finding new ways of working, such as involving additional investors through a blockchain-based token. And that's what you will hear more about in the coming weeks. As you know, I had announced this for April. There is a bit of delay that I've shared on Twitter. And so it's more regulatory checks ongoing, nothing major, because again, we need to align policy and technology. Technology is always faster.
The hardest thing.
At one point,
if technology is growing exponentially, then business innovation is linear, and policy is a sort of roller coaster. You know, sometimes we're on top of things, sometimes we take a step back. I've been involved in this forever, and it's sometimes very frustrating. It is, I think, especially frustrating for cryptocurrency fans, most of them belonging to a younger generation, who believe that I buy this asset, I buy this token, and I'm going to change the world. The world is an extremely, especially trade finance and banking, is an extremely complex system. There are so many moving parts. There are so many different interests. One last question I have for you in where this is going. Will some players that now play an essential role in international finance and trade finance, from the manufacturers to the banks, to the customs authorities, to the lawyers, to the notaries, which segment of that ecosystem will be impacted most by blockchain? And by impacted, I mean also suffering job losses and being made literally obsolete by blockchain. Where do you see the biggest impact of this blockchain revolution in trade finance?
So I think the trend we're going to see is more and more functions and processes moving on chain. It could be the one or the other chain, that doesn't matter. But the legacy world is off chain completely today. And with Enijo, we're moving the tracking of documents on chain. With TradeTech, we're moving more and more trade distribution on chain, liquidity on chain, and payments will move on chain as well. That's an important use case. The regulators also support with CBDCs, for instance. So more and more on chain, a migration to on chain will happen, and the efficiency will be optimized when all of those processes will be on-chain. Now, in the meantime, those who will suffer are the intermediaries that still try to remain off-chain. My previous employer, for instance, Swift, is a completely off-chain communication platform between banks. Imagine central banks pushing CBDCs And more blockchain networks, we know of famous ones that are supporting cross-border payments. They start in retail, micropayments, but they're going up the value chain, and they will get into B2B payments and high-value payments. As central banks moving to CBDCs, the highest value payments that SWIFT operates, they will move on chain as well. What is the role for SWIFT in that matter? So I'm not concerned about the banks. I'm not concerned about the working capital platforms that we see in trade finance that are really supporting SME financing, because they operate a much needed business and key relationships. I'm concerned about those intermediaries that have an old-fashioned way of working, because they were addressing needs in 50 years ago, and that are sometimes resisting the move to on-chain processes, basically. So I would be more concerned about those intermediaries, and potentially more technology intermediaries. SWIFT is one that comes to mind, but you have a lot of payment clearing systems at country level that cost a fortune to banks, and that might also be outdated over time, take a 10-15 year period, not 5 years, as payments move on-chain. And rather than having clearing at domestic level, you have global clearing on-chain, because the technology has no border.
The technology has no border, but the world has borders. You are an internationally active consultant. I don't have to tell you this. I've lived in several countries, and I've seen the way banks work is entirely different from jurisdiction to jurisdiction, from culture to culture. You go to a bank in Hong Kong, you need 10 different red chops, and your signature is invalid. If you go to a British bank with a hand-carved chop, they will just, they will have a laughing fit. In trade finance, if you go to India and do trading in India, there is whole floors full of people chopping and looking through your documents until there's finally you find the one person who will reject your approval, right? Your application. The world is so complex in banking, so many different systems, so many countries at different levels of development. Do you see blockchain as a leveler? Do you see blockchain as the future that we aspire to make the world more compatible, more interoperable? I'm not speaking about the tech, I'm talking about the people. Will blockchain lead us into a more interoperable world as opposed to a simply more connected world?
Yeah, more interoperable for sure, because actually the Web 2, in a way, design is where you have a central governance, a central system, and the users connect to that system, pay for that system, and the trust is around that central system. Now with blockchain, the trust is in the asset that is tracked on the blockchain. The full asset may be on the blockchain, but the asset may be off-chain as well. Like, as I said, a document with business data, the business data will be off-chain. Or if you're trading real estate, of course, real estate is a physical thing, so that is off-chain as well. But definitely more and more interoperability. Those innovations do not start in the largest countries. They start in Abu Dhabi, and AGGM has been very progressive on this. They see the new industries that we can build around blockchain. I like to watch those more progressive jurisdictions changing their laws to attract new businesses relying on blockchain, but not only. And we will soon also see more and more CBDCs being launched by central banks in specific countries. And possibly the largest countries will be the slower to move, because they have other priorities, because the political system is not open to those technology innovations. So that's why I like to work in the Middle East often, because the regulators there, the policymakers are really open to attracting new businesses, because they need to move away from the oil period and move into attracting new economic activity. And technology is definitely a segment that they aim to attract on their soil and in their landscape. So Abu Dhabi, Dubai are very open to those innovations. Now the UK
Andre,
is G7 that is the most advanced. So I think the UK is very interesting as well, possibly the exception in the G7, and that's also thanks to a strong political will.
that is music to my ears. Fantastic. Andre, we've already gone over time for the scheduled call, because when they edit it, they need a bit of extra time to fit in there. I will not, some of the questions in the Q&A I see before me are either not appropriate for this conversation and we have to defer to a different setting. You have graciously agreed that you will do this once a month with us. You will bring on different guests. We will continue our discussion on trade finance. I think we will find a format where interested listeners can send us questions beforehand. Yep. Only the top 5 questions I see here, if we would answer them, we would spend another hour on this call. And I'm very sorry to say, I honestly can't take more of your time. It's been such a pleasure speaking to you. It's been such an honor to have you at Uphold, and I'm looking forward to our monthly meeting on trade finance. Thank you, sir. Merci mille fois.
Avec plaisir, Martin. Pleasure being here and joining your Uphold community.
Thank you, Andre. Goodbye.
Bye-bye.